Ladies and gentlemen, welcome back to the channel. Rezolve is up about 4% today, sitting at $3.69, almost 70 cents per share. We're going to talk about Rezolve in today's episode. We're going to go over the new information that Rezolve has shared with us. They put out a new press release today. We're going to look at the option activity, what the short sellers are doing in their positions. We're going to look at retail investor sentiment. We're going to take a look at the charts and discuss the big news today towards the end of the trading day that did have a positive impact on Rezolve, despite Rezolve's historical negative beta and what generally had a very positive result on this market as well. Hit that like button, subscribe to the channel if you guys have not done so already, ladies and gentlemen. And let's begin. So Rezolve getting a much needed relief rally, if you will, following yesterday's decline. From the high of the day yesterday, the stock was about $4.88 at the high. You closed down 27% from the high of the day yesterday. Incredible volatility. Now, we already know why that is, okay? Rezolve announced that they were going to close a $250 million financing round, essentially to sell stock to institutional investors at $4 per share. Now, there's a lot of thoughts around this. There's a lot of people with various opinions, okay? It was poor timing. You know, in theory, the company should have seen like the rally that was, about to happen, like the option activity, the short position. The writing was on the wall for the stock to go significantly higher. Now, neither here or there. What has happened has happened. The fact of the matter is, at this stage, dilution is neither positive nor negative for shareholder value. Let me explain this. Dilution is negative if the company dilutes shareholders and then buys an asset that is dog crap, okay? Then you're just losing out. If the company buys a good asset and, let's say raise $250 million, they buy an asset worth $400 million, then that's what you'd call a good acquisition and will grow shareholder value over time. It's one of those things where it's sacrificing short-term gains for long-term gains. Okay, now Rezolve believes they have a massive market opportunity ahead of them. And perhaps that's probably true. Agentic AI, agentic commerce, I think that is the direction that we are heading in. But it does, to some degree, kill the short-term momentum. And that is what you've seen with the stock. Now, I believe the company should raise capital, okay? But I don't believe they should dump on investors the first chance they get, okay? I do believe they should be a little bit more tactical with how they are raising capital. And if management is listening to this video right now, I highly suggest that you hire somebody that pays attention to the stock. This could become a major retail stock. Retail investors want to see their stocks do well. They want to see the business do well. They want to support you through that journey, but they don't want to be dumped on the first chance management has, okay? They want to be dumped on after, well, some value is created. And yeah, value was created. The stock went from $2 to $4 to almost $5. But the writing was on the wall for a larger rally, and that has disappointed a lot of people. So I just suggest that you hire somebody that pays more attention to the stock, what's going on, the technicals, the tactical aspects like short positioning, option activity, market sentiment, things like that. If the strategy is to raise capital, I think that's critical, and I think that would, pay somebody 70 grand a year to do that. I think when you're raising 250 million in these rounds, shareholders are going to net benefit 10x or more by somebody taking the role of watching the stock on a closer basis. Okay. Again, neither here or there whether the company decides to do that or not. This dilution yesterday does not change the fundamental value of the company. Okay. In my estimates, kind of a reasonable valuation is in the range of $10 to $20 per share, right? $10 to $20 per share from a fundamental basis makes a lot of sense to me for this year. Okay. After yesterday's dilution, you take that down a little bit. You take that down a little bit to call it $9 a share. They did roughly 20% dilution. The stock was almost $5 a share. Take it down about $1, whatever your expectation was. Okay, we talked about this in the last video, but again, I want to highlight it doesn't kill the thesis for the stock. It doesn't, in fact, change any of the long-term bull thesis for the stock. $1 difference per share is immeasurable if Rezolve is going to be as successful as we think they will be in agentic commerce longer term, right? It's almost like it doesn't matter, right? You win. I mean, it's kind of like this is a really bad example, but I just watched a movie on Netflix called The Rip, and it's like the cartel that just assume that some of their money is going to come up missing. It's going to get seized, right? It's the cost of doing business. If Rezolve is $50 a share, you're not going to give a rat's ass about the dilution that happened today. If Rezolve's $50 a share, let's say, or $30 a share, let's say, 12, 24, 36 months from now, right? And that's the idea. If you're longer term investors, this doesn't matter at all. And generally, people get over dilution pretty quickly, right? Normally, you stock dilutes, get over it. This does likely mean you're not getting any dilution anytime soon. Now, let's get into some of the new updates for Rezolve. And I'm kind of chuckling here because yesterday, Rezolve put out a press release about raising $250 million, blah, blah, blah. Stock did poorly. They, as they normally do, posted a post on X about this. Well, I was alerted to this by the trading community. If you guys want to come join that, check that link out down below in the description of today's episode. We did a lot of buying in the trading community today alone. So a lot of new positions, a lot of adding to positions. If you guys want to join, that link is down below in the description of today's episode. I do think 2026 is going to be a great year. But people were alerting me in the trading community at like 7, 8 o'clock in the morning today that Rezolve had deleted their tweet. And people were asking, like, what does this mean? I have never seen that before. It appears like they were being bullied. Okay. I don't know if bullied is the right word. They kind of deserve it to a certain extent. They should have had the foresight to see what was happening with the stock and waited to dilute shareholders. Do it now, do it later. It's the same ultimate outcome. If you're a long-term investor, who cares anyways? But they deleted the post from yesterday from their X account. Almost like literally every comment on that post was really, really negative. Some people were just outright mean. Now, I don't think you should, bully people, but you should definitely stick up for what you believe in the companies that you invest in. So I thought that was interesting. They deleted that post. Well, they posted this today. They said Rezolve AI announces the successful closing of its previously disclosed $250 million registered direct financing. The offering was significantly oversubscribed, anchored by certain returning fundamental institutional investors, and supported by a select group of new long-term holders. So Rezolve kept their press release up from yesterday. They didn't take that down or anything. Now, it says here, Rezolve AI closes $250 million oversubscribed financing, enters 2026 with one of the strongest balance sheets in AI commerce. Okay, now it says here, Rezolve AI, a global leader in agentic commerce and AI-powered retail infrastructure, today announced the successful closing of its previously disclosed $250 million registered direct financing. The offering was significantly oversubscribed, anchored by certain returning fundamental institutional investors, and supported by a select group of new long-term holders. Management believes the financing marks a major inflection point for Rezolve AI, materially strengthening the company's balance sheet and positioning it to be among the best capitalized platforms in AI-driven commerce. With substantial liquidity and no change to strategic direction, Rezolve AI enters 2026 with enhanced flexibility to execute disciplined M&A, accelerate enterprise deployments, and scale towards its previously communicated revenue objectives. The strong demand for the offering follows a period of heightened investor engagement and elevated trading activity, which Rezolve believes reflects growing institutional confidence in Rezolve AI's execution, differentiated technology platform, and readiness to support large-scale production-grade AI deployments across global retail environments. It says here, from Dan Wagner. Dan Wagner says, quote, "This financing represents a clear vote of confidence from sophisticated institutional investors who understand both the scale of the opportunity and our ability to execute. We now move forward exceptionally well capitalized with the resources to advance disciplined acquisitions, expand enterprise rollouts globally, and convert accelerating commercial momentum into durable, predictable revenue growth." They say Rezolve AI's platform was purpose-built for live deterministic commerce environments, integrating discovery, pricing, and availability and transaction execution within a single enterprise-grade architecture. As retailers transition from pilot programs to full production deployments of AI, the company believes its commerce-native approach is increasingly resonating with customers and institutional investors alike. It says the proceeds from the financing further enhance Rezolve AI's ability to advance its previously announced M&A strategy in a disciplined manner, support accelerating enterprise customer onboarding and global rollouts, scale infrastructure and platform capacity to meet production demand, and maintain balance sheet resilience while pursuing long-term value creation. Now, it would have been cool to get some kind of rundown and how much cash they have. They should have like $300+ million on their balance sheet. Again, we don't exactly know that. They didn't provide much clarity on that. They did not provide a specific buyout. Rezolve talked about a potential buyout in the works on January 13th. We assume that this capital raise was to fund that buyout, and it probably is. It's probably just not finalized yet, but they're getting the capital to, do that buyout, right? So another big catalyst for Rezolve is going to be when we hear about this new buyout. Does Wall Street think it's good or bad for the stock? Now, something else you have to understand is insiders in the company own a significant amount of the stock, okay? Insiders hold a lot of stock. Around 31% of all shares are owned by insiders at the company, people that work at the company. Something I will be watching very closely in the coming months and quarters is what are insiders doing with their positions. If insiders sell, normally I wouldn't care. Normally I don't care much about insiders selling stock unless it's something that's crazy obvious. There is a million reasons why somebody sells a stock. Maybe they don't think the business is doing well. Maybe their kids are getting married. Maybe they want to go on vacation. Maybe they want to buy a new house or a new car or diversify, whatever it is. Okay, there's a million reasons why somebody would sell stock. But in the case of Rezolve, with the company selling so much stock, I'm going to be watching this closely and determining what I do with the position, right? If you start to see a lot of insiders selling their stock, that doesn't necessarily say they're bearish on the business, but it does say that they plan to do dilution to the point of they don't want to hold the stock, right? That's not happening. You haven't had any insider selling, and presumably you're not going to. Now, assuming that, keep in mind, management and insiders at the company are exposed to the same stock price as you, okay? If they raise capital to presumably better the business and the stock sells off 27% from the high of the day yesterday, their portfolios in their Rezolve position also did the same thing as yours, right? Their idea is, again, you dilute shareholders now, create massive shareholder value in the future. So assuming insiders and management did not sell their positions, they truly look at this capital raise as an opportunity. Again, that's the baseline way that I always think about things. Just again, a little unfortunate the timing in which of this offering. Even Rezolve said we've had elevated trading activity. Like, they pointed this out themselves, and I think they put that in after the fact because of how irritated a lot of retail investors were. But again, keep in mind the bigger picture here. Dilution happens all the time in companies, and you rarely think back to the dilution that happened before, right? Wall Street gets over it pretty quickly. Retail investors get over it pretty quickly. Coming next week or the week after that, people aren't even going to think about the dilution anymore. It's back to business as usual. But again, you should take down your personal expectations about $1 per share versus where you had them before this offering. That's just the simplest way to put it. Now, there is zero unusual option activity today. Yesterday, somebody got absolutely screwed. An institutional investor bought a January 20th, 2028 $3 call for $106,000. Now it's 2028. This is not the craziest trade. The break even is about $5.80 per share. So they lost probably about 20% within hours. Like, if you thought Rezolve has bad timing, well, whoever bought that trade yesterday has really bad timing as well. Now, short interest of free float is estimated at about 28% today. Look at these crazy numbers. Ortex is estimating 15 million shares were covered today. I obviously don't think that kind of a number was covered, but who knows? Short interest, last we knew from reported numbers, was 24.5%. So still up a little bit from that point, but only estimated at about 28% short interest, which is still plenty of short interest to cause quite a rally if shorts decide to cover on short position. Now, one of the more surprising things following the offering yesterday is retail investors largely just are still bullish on the stock. There hasn't been much of a sentiment change that is measurable as of right now. Over on StockTwits, sentiment is extremely bullish at 79. Yesterday, it was extremely bullish at 83. So again, a little bit of a decline, but the stock fell 20% yesterday. Like, that's a lot better than you would have expected. Message volume is extremely high at 75, unchanged from yesterday. Participation ratio is low at 39, which is kind of in line with where numbers have been recently. Now, when it comes to the stock from a tactical perspective, from a technical perspective, like the charts, I mean, you found support today right at your 20-day moving average. So there appears to be demand for the stock, which is great, around these major moving averages. You went up a bit. You closed at about midpoint, not the high of the day today, not the low of the day, about in the middle. So don't get much of a read out of that. And you're almost exactly in the middle of your 20-day moving average and your 100-day moving average. The 100-day moving average is at $422 per share. If we can get to the high threes again, $3.80, $3.90, and break into the fours, you know, there could be a shot again to break back to about the fives in the shorter term here. Now, again, we'll see what happens with option activity, what the shorts decide to do, and really getting to $5 per share again is like previously getting to $6. Okay, so you have to keep that in mind. But from a technical perspective, the stock looks pretty neutral overall. So it's not like we're destined for further downside. We're neither destined to reclaim some of the levels that we were just at. And again, if you are in Rezolve, I hope that you understand the stock on a fundamental level like we do, and you are investing in the stock for the fundamental reasons, not that you need to see a 10% rally, 100% rally in a week or two. That momentum was killed with yesterday's offering. It could come back, but forecasting that is a guessing game. Typically following an offering, there's a period of time of digestion where you just kill whatever the momentum was. Like when stocks, go up 5x or 2x or whatever the number is, and then management dilutes investors, it takes a while for the stock to go back to where it was before that dilution. Even, well-established, well-known companies. Rezolve, not a well-known company. It's a diamond in the rough. Okay. Now, if we get any news, there's been speculation about a potential McDonald's partnership with Rezolve. Something like that would be a total game changer for the stock. And who knows? We'll see. There's nothing definitive on that at this moment. So, those are kind of my thoughts. Again, a fair value for the stock, I think, puts the stock in a $10 to $20 range, really the $9 to $19 range if you want to get a little bit more specific. But there's no telling on what the timeline is going to look like to get us to those levels. So let me know your thoughts on this down below in the comment section. What do you think about the recent news that has come out? What do you think about the news today? What do you think about the McDonald's rumor news? Have you also heard that? Or is that just me? So thank you for watching. That is it, ladies and gentlemen. If you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.